Hey everyone, me Kevin here. This video is going to be broken down into 3 parts. Chapter 1, China likes Tesla, but will that change? Will China kick Tesla to the curb in favor of Chinese companies? And does that mean we need to be careful? In Chapter 2, we'll talk about the EV, the electric vehicle war, and China's dream. And in Chapter 3, we'll break down what the heck we should do. Let's get started right after I mention that you should get a totally free $51, deposit $100 with M1 Finance, and you get a totally free $30 that you can then invest with your $100 into the pies, like the suggestions I have down below, or any pie that you want to create. And if you deposit $100 with Webull as well, you get a minimum of $21 worth of free stocks. Could be worth up to $1,600 though. It's a lottery, but hey, you may as well play if you haven't yet. Chapter 1. China loves Tesla, for now. All right, folks, let's talk about this. This is a really good background to know about China and Tesla. It's really useful because look, when Tesla first introduced the Model S in China in 2014, Tesla didn't realize that people wealthy enough to have a Model S had chauffeurs, and they wanted very nice back seats, and that led the Model S not to sell as well. But something changed in 2017. Tencent, Chinese company, bought a 5% stake in Tesla. Elon Musk said they'd become an investor and advisor on Twitter. And from there, things basically went to the moon, especially in China. It's almost like Elon got the connection he finally needed in China. Now, I can't blame everything on Tencent in terms of being positively blaming him, but the timing is interesting. First, consider this. Last year, 2020, during the COVID outbreak, Tesla's 2018 Gigafactory maintained a steady stream of workers. These workers came from Chinese-run dormitories on government-run buses, fully stocked with N95 respirators while the world was struggling to find any respirators. The allocation of these high-quality masks, much better than the masks we use here that don't work, the N95s actually do work, and China got them because, well, Tesla China got them because the Chinese government put them aside for Tesla China. At the same time, the factory at Shanghai, the Gigafactory Shanghai, was being disinfected with chemicals that require a government-approved license to actually get your hands on. And at the same time, Toyota and Volkswagen were struggling to reopen, and they weren't getting any of the same favoritism from Tesla. See, this is similar to the benefits that Tesla got when they built their Gigafactory in the first place. Tax breaks, cheap loans, and streamlined permits. China usually takes ownership in Chinese companies. A Chinese company, the Chinese company Nio, for example, is owned 25% or 25% owned by a city in China. And guess what? When Tesla was asked to give up some ownership to the Chinese government, Tesla said, no, if you want us to do business here, we want to retain complete control of Tesla. And Tesla got it. But not only did Tesla get complete control, which was unprecedented for a foreign company doing business in China, but Tesla ended up getting a loan of $521 million. And this loan was called a no-recourse loan, which if you know real estate, you know what this is. But otherwise, a no-recourse basically means, hey, if you go bust, if your business goes bust, in China, for example, the Chinese government would just eat the $521 million loss. They wouldn't come after Tesla United States. And so when the deal was finalized, the local electric company that needed to provide electricity to Tesla China said, hey, we've never hooked up a company as fast as we just hooked up Tesla. And they got water hooked up in just 4 days. Because they had such a push from the Chinese government to get Tesla hooked up. I can't even get a permit to change a ceiling fan in California in 4 days. But then again, California is really a topic for a different video. So it kind of makes sense why Elon Musk says that China rocks. China is helping Tesla a lot and has consistently helped Tesla a lot. And this comes at the same time as 75% of US businesses doing business in China feel that hostilities are increasing. That is, things are getting harder, not easier. And yet Tesla is killing it. Tesla is producing so many cars that Tesla China is now shipping some of them to Europe. Also, which can be slightly concerning because some folks are wondering, is this a sign that Tesla is overproducing and there's not enough demand for Teslas in China? After all, the base Model 3 has a delivery time frame of just 1 to 4 weeks, which is one of the lowest delivery slots available. The others are all like 6 to 10 weeks, much more normal like what we see in the United States. But hey, we'll find out more about this in Chapter 2. Let's talk about the EV war in China, and then we'll understand more. So now we know, at this point in the video, we know China loves Tesla, and Tesla loves China. But is this relationship going to stay? And what's this whole EV war that we're expecting to break out in China? Let's talk about that. So China is the world's largest EV market. 1.2 million EVs were sold there in 2020, and that's 40% of everything sold in the entire world. But China isn't playing a short game here by helping Tesla. China has a very long view in mind. And in that long view, people wonder, isn't China going to favor Chinese companies? China does have some priorities for now. For right now, China wants to be the biggest EV manufacturer of the world. China wants to be the powerhouse where everybody gets their EVs made in China, or at least the bulk of them. In China, just to give you an idea of how much they're pushing EVs, take the city Shanghai, for example. In Shanghai, if you want to get a license plate for a new gas car, you have to win a lottery to get it, and even after you do, you have to pay $14,000 to get a license plate to permit a new gas car. EVs get their license plate for free. And the subsidies that encourage people to keep buying EVs keep getting extended and extended, much like, a lot of what we see in the United States, where the subsidies to encourage EV adoption continue to get extended. As a result, there is a bit of an argument that, hey, Tesla's probably pretty critical to China's mission of expanding EVs and becoming the EV powerhouse, at least for the time being. See, think about this. Tesla props up the entire Chinese EV industry. It's kind of like when you're running a race against somebody who's slightly faster than you, you tend to run faster so that you could try to catch up. This is happening in reality with these Chinese EV companies as well. Think about, for example, Tesla's partnership with CATL, China's largest EV battery manufacturer in China. Well, what happens when Tesla partners with this battery company? Well, revenue at CATL skyrockets, allowing the company itself to invest in its facilities more. The more money it gets, the more it can also take on other companies, like they produce Nio's batteries, for example. And its stock has 3x'd in 2020, which lets CATL raise capital more easily to expand even faster. And basically, once the wheel spins faster, it tends to just accelerate and spin faster and faster. This might, for example, be just one reason why China is kind of paving the road for Tesla to have the easiest possible time expanding in China. Because the success of Tesla right now in China as the biggest EV heavyweight, at least self-driving and foreign EV, the weight of Tesla is so strong that it's pulling up the entire industry, and it's helping all of the Chinese companies succeed. China even has a goal of what's known as dual circulation. This basically means rather than producing cars and selling them locally, China wants to eventually sell them all around the world. This might explain why Tesla is sending some cars to Europe. This could be a deal with the Chinese government, at least until Giga Berlin is built. And the other thing that China is really trying to push is they're trying to get the Made in China title to mean something of value rather than something of not value, which oftentimes Made in China is associated with. China is trying to combat that, and so by dual circulation, China is basically forcing the adoption of Chinese-made vehicles elsewhere throughout the world. Now, the problem is, you've got some issues with this. First of all, people in Europe are pretty dang loyal to things made in Italy or made in Germany or made in France. These are issues of national pride, but that could end up wearing away, especially if the prices are much more reasonable for made in China cars. We'll see. But right now, only 1.7% of cars produced in China actually go abroad, so there's a lot of work to do for China and Chinese company, which this kind of brings up Nio and Xpeng. Some theorize that China is just propping up Tesla so that Nio and Xpeng can follow similar but slightly different models to Tesla. Look at Nio and Xpeng's website compared to Tesla. A lot of similarities. Look at the pricing of the P7 by Xpeng to compete with the Tesla Model 3, and the crossover battle between Nio and Tesla's Model Y, and Nio's newly announced car, which will compete with the Model S, right? The competition of Chinese companies is heating up. And this kind of backs our runner example here. China props up Tesla to get their companies to have more access to material facilities that are now more capable of expanding faster and producing faster, so there are more materials available, so that Chinese companies can get propped up as well. Think about the battery example there. But it's not just that. And some argue that China is just literally copying Tesla, which might be true in some regards. Nio, though, is picking up where Tesla left off on some things, like battery swapping technology, which is brilliant. I think it's a phenomenal idea. Tesla's never going to get into battery swapping with their new structural battery move, but that gives Nio a unique edge that Tesla is unlikely to ever compete with. And Nio and Xpeng prioritize LiDAR, especially forward-facing LiDAR, which could be a selling pitch for cheaper and concealable LiDAR, which Elon so far refuses to use for self-driving. Both, or all three of these companies have similar autonomous driving tech right now, and all three of them are growing at insane rates. But, you can't help but wonder if what a former Chrysler executive said is true. He says that Elon played the game very well, but Tesla got this because it was in China's interest for Tesla to have it. And this kind of implies that it could all end very quickly for Tesla in China, once Nio and Xpeng get propped up enough, or the other Chinese companies. But what are China's priorities? It's helpful to understand what China's priorities are, so then we can try to understand when might Tesla get the boot, if ever. Well, the questions that we have are they trying to prop up their market just large enough to get rid of Tesla, and then Tesla's overstayed its welcome, or do they have a different priority? Well, let's understand what we know. By 2035, China is demanding that 50% of all cars be electric and 50% of all cars be hybrid, aka no gas-powered vehicles exclusively, but the 50% could be gas and electric, right? Hybrid. Now, Chinese car sales are around 20 to 24 million passenger cars per year, some around 2 million per month. Only about 5% right now goes to the electric vehicle market. This means that over the next 15 years, China is literally bluntly telling us the EV market will at least 10x. If people stop buying hybrids in favor of EVs, we could see sales 15 to 20x for EVs. The growth is literally insane. The potential for EVs is insane. You have to be invested in these. And so, this begs the question, are Tesla's days in China numbered? Remember how earlier I said China is playing the long game? I personally believe, and this is my opinion compared to the research I've been providing, I personally believe that China is very smart in knowing that Tesla ought not to be burdened, even if it's a US leader in China, until well after they hit their goals, which probably won't happen until 2035 or later if it takes longer for people to hit their targets or the country to hit their targets. When China hits its targets, sure, it is possible that Chinese favoritism will start settling in, and things might get a little bit more challenging for Tesla to continue to expand in China. This is to be expected, but by that time, Tesla's likely to have not only dozens of gigafactories around the world, but multiple gigafactories throughout mainland China, and they might not need as much support anymore. We'll see. Support is always nice. And there is currently talk about, get this, Tesla opening a gigafactory in India, which what's interesting about that is India buys a lot of cars from China. So you're already seeing Tesla prepare for the next 15 years by setting up shop in one of China's largest foreign markets. This is brilliant. This is Tesla literally being brilliant. You have to hand it to them. But China is likely to remain okay with this for the time being, because China needs Tesla more than Tesla needs China right now. They need Tesla's skill and partnerships with battery technology, which they share their research, not all, but some, with battery manufacturers like CATL and other manufacturers. They need Tesla's demand for products. For example, look, the more batteries get made for Teslas, the more graphite miners need to work and become more efficient and more profitable. And the more they're able to become more efficient and more profitable and expand their facilities, which means there's more graphite available for Nio and Xpeng. It all is this cycle of helping each other. And so right now, I think Tesla is heavily entrenched. Tesla isn't going anywhere anytime soon in China. Now, Chapter 3. Nio Xpeng versus Tesla. Xpeng just got a $2 billion credit line from a Chinese-sponsored bank to crank Xpeng's production levels. At the same time, Nio just raised $1.3 billion in debt that matures in 5 to 6 years, 2026 and 2027, and this debt converts to shares at $90 per share. It's a nice premium over where the stock is trading for right now, about $60. But by 2026, 2027, well, let's just say $90 a share is going to sound like a deal. In 5 years, this company is going to be trading for well above $130 to $150 per share. Maybe even way more. Who knows? It could literally 5 to 10x. If people stop being fearful of Chinese companies and investments, we might even see that accelerate sooner. It depends how much American equity markets become okay with investing in Chinese companies. And look, sure, Nio almost went bankrupt, but so did Tesla. The difference here is Tesla is wholly owned by the United States, and Nio is owned, well, 25% of it is owned by a Chinese city, Hefei. Nio's production line is also 50% owned by the Chinese government and 50% owned by Volkswagen. Well, it's not even really Nio's production line. Nio uses the production line. They're using another manufacturer to make their vehicles. But big picture, right? Let's look big picture. Tesla is not leaving the China race anytime soon. Not for the next 15 years, in my opinion. Nio and Xpeng are going to keep growing on the heels of Tesla, and to me, this is not a winner-take-all system. Sure, Tesla might take most for now, but these companies are all trading for similar valuations, and while they might be on different growth trajectories depending on their decisions, like Nio focusing more on luxury, which is going to lead to fewer sales but maybe higher margin, diversifying your EV exposure is not a terrible idea, and I don't know that the traditional auto manufacturers are going to be up to the task of innovating the way these companies are. Let's take a look at some valuations for these companies. Xpeng right now trades for about 9.3 times 2022 revenue to enterprise value. This basically means you take 2022 estimated revenue, you multiply it by 9 times, and you get the enterprise value for the company. Nio trades for about 12 times 2022 revenue to EV, enterprise value, not electric vehicle, and Tesla trades for 13 times 2022 revenue to EV. So when you look at this, Xpeng actually seems to be the runt of the litter, but they're all relatively similarly priced. Personally, I believe on red days like today, you have a great opportunity to pick up more shares of Nio and Xpeng. Now, we also understand China a little bit better now, and maybe you're more interested in warming up to China, but let's be real about investing. Are these companies really at risk of getting delisted? Probably not. It wouldn't shock me that if Nio and Xpeng got delisted to see China retaliate against Tesla, which would be very bad. And I don't think Biden will let that happen. Sure, Biden's rhetoric has increased in China or against China over the last few months, but a lot of this could be to win over potential Trump or swing voters during the election because people were fearful. This was one of Trump's arguments that Biden was going to be weak on China. For me, I'm buying all of these stocks. That's the bottom line. I'm buying all of these stocks. My plan is for every $10 I invest, I want about $2 to $3 to go into Nio. I want $1.50 to $2 to go into Xpeng, and I want the rest, the other $5, $6-ish to go into Tesla. For now, I might change that ratio in the future, but for now, I love placing money into these 3 companies. These are companies to own and companies to hold, and guess what? They're actually producing vehicles. Unlike the dozens of SPACs that say, "Hey, we're getting into commercial vehicle manufacturing." Right. Show me the actual contracts, and not like a purchase of 2 or 3 vehicles either to test it out, only to end up going with a different company in the future, like XL Fleets. But there are plenty of these. Be careful. That's all I recommend. SPACs, be careful. Nio, Xpeng, Tesla, buy these blindfolded. In my opinion, not financial advice. Subscribe and share if you found this helpful. Thank you so much for watching. Make sure to pick up your $51 on your way out via the links down below, and folks, we'll see you in the next video.